Hi there, I'm Lee, welcome to iMineBlocks. Today's video I'm going to be talking about a headline that caught my attention this morning. So I'm going to be talking about this headline and what it means for us miners. So taking a look at ccn.com, the headline reads, Bitmain has developed an Ethereum Asic miner, Wall Street analyst claims. So this is where I see this headline, and some people might think this is already sort of common knowledge, or at least it's been expected for a while, that Bitmain or other ASIC manufacturers have been working on an Ethereum ASIC. And it's very likely because Ethereum right now is pumping out a lot of coins, and that has a very high value. So anyone that can put out, any kind of ASIC hardware has a lot of profits, a lot of potential gain to reap those rewards. So creating an ASIC for Ethereum is obviously very attractive. Up until now, as far as we know, Ethereum has been ASIC resistant. It's done by design. There's a lot of higher memory requirements. So that's why until this point it's always been CPU mined and GPU mined. So let's read through and have a little closer look at this news story. So it says a leading Wall Street research firm, the research firm is called Susquehanna. I've not heard of that firm, but I'm not that familiar with it, to be honest. And the analyst is Christopher Rowland. So the article reads here, during our travels through Asia last week, we confirmed that Bitmain has already developed an ASIC, so that's quite a bold statement in itself, for mining Ethereum, and is ready in the supply chain for shipments in the second quarter of 2018. So that's quite a dramatic statement. It also says that we have learned that at least 3 other companies are also working on Ethereum ASICs. So like I say, this is a very attractive proposition for ASIC manufacturers. If they can mine these or create these miners, it can be extremely profitable for them. So it doesn't surprise me that companies are working on it, and they could be potentially related to be releasing them soon. Some others might also argue that Bitmain, for example, already has some Ethereum ASIC miners, and they're kind of keeping them in-house, mining as much as profitable, and then kind of closer to the end, when the game's almost up, they will then kind of release those miners to the public. We can maybe have a couple of months with them if we're lucky, and then that'll be the end of that stage of the life of the ASIC miner. So I'll link to the original story. So this is kind of like a cover story. Originally it was shared on CNBC, and their headline read, Analyst slashes AMD and Nvidia price targets on new cryptocurrency mining chip from China. So again with the headlines, so this company, or the analyst, they have reduced the price targets for Nvidia and also AMD. So Nvidia, new price target is at $200. It's at their original price target was $215, and they're currently trading at let's call it $245. AMD, they also put a price target of $750, down from the current price. I think originally they had $14 on those prices. And then it just covers the same story in a little bit more detail. The other sort of parts that I found was interesting was that Rowland, the analyst, believes that Bitmain's specialized chip offering for Ethereum will hurt demand for the PC graphics card manufacturers. He estimated Ethereum mining related sales accounted for about 20% of AMD sales and 10% for Nvidia's revenue for that previous section of time, or the last year. I don't know for certain, and I can only sort of guess as an amateur at these things, but I think the graphics card sales for both AMD and Nvidia was significantly higher, because if you look at the response that you get back from gamers and how bad it's hurting those guys in terms of pricing, pretty much all of the cards that I've seen recently are being sort of 2 to 3 times their original price. So that means that miners are probably taking almost half of the gaming stock, I would say, to push up the price quite so significantly. So I think the AMD and Nvidia sales for miners was significantly higher to those percentages, but we'll see. Let's just take a look at the Nvidia and also the AMD prices. So these are the stock prices, and I don't normally go into this, but I think it's worth sharing this kind of information because it directly does affect us as crypto miners. So this is the Nvidia stock price over the past 5 years. So you see it really sort of started off in 2016, and by the way, that's when a lot of people started getting into mining in a much bigger way. It became a lot more mainstream. And then for 2017, the crypto mining kind of revolution really kicked into higher gear, and the Nvidia price has skyrocketed. So from 110 up to 245 in this past year. I think a lot of those gains have been from selling GPUs primarily to miners. So I think that's the way I look at it. So I think I don't really go into stocks and stuff like that, but I think Nvidia stock price is going to come down with a bump. With AMD, it's a slightly different story. Going back, it's another 5-year chart. In 2016, similar sort of story until the end of 2017. The price increased quite dramatically, and again, that's really like say when the people was really getting into crypto mining. I know I personally was getting into it in a much bigger way. That's when I first started doing a lot of these videos and stuff. So they've got a lot of gains there as well. Again, I think a lot of that is due to crypto mining. They did release some graphics cards, but I think it's I've not really seen so many people buying AMD graphics cards for gaming. All I hear is people buying the cards for mining. And then for 2017, it's kind of just bobbed up and down quite dramatically, with no real gains for that 2017 period, which is quite the contrast versus the Nvidia prices. I think Nvidia had a much better offering in terms of cards that were suitable for gamers and also miners, so that could be a reflection in the stock price. Who knows? Taking a look at the Ethereum network hash rate, so I also want to cover the price as well. So primarily what increases a cryptocurrency's hash rate is primarily led, not always, but primarily it's led by the price of the coin or the profitability of the coin. So what you'll often see is that the price of a coin or cryptocurrency will start increasing, and then you will often see a hash rate increase afterwards, where people are chasing that profit effectively. And you can also sometimes see where if the kind of the profit is affected on one coin, you might also see the hash rate swap to another coin. We did see that, was it last year or about 18 months ago? I can't remember the exact time frame from memory, when people started mining Zcash as an alternative to mining Ethereum. So generally the hash rate follows the price. So in the last, this is from July 2016, and you can see it's the Ethereum hash rate. So pretty steady for 2016, and then from January 2017, it gets a bump to about the halfway mark. And then here from November and December, the hash rate increases significantly, very dramatic increase there. Now, if you take a look at the Ethereum price, you can see, so from November and then through December and January, massive increases in prices. So the guys that were sort of started mining then, and then by the time they got to there, they was making significantly more money. At that time, it also went up significantly in difficulty. The other interesting point as well is that now that we are here, the difficulty and the hash rate is still very high, but the price has come down to less than half of what it was at that peak. So now that means that everyone is getting much less profits. You're probably getting less than half what you was back in sort of January. So now what we should start seeing is that the hash rate should start coming down. But the interesting point here is that because of these new ASICs might be coming onto the market, it could keep it at level, or maybe people are just going to kind of mine through this tougher period of time, because it is still profitable, but the profits are not what they once was. Taking a look at what to mine. So I use this site to kind of work out your average earnings, and it's kind of a good indicator because you can kind of get a snapshot of what's going on. So they've got it pre-configured, so you can kind of add in your graphics cards, which makes it quite a useful way to check things. So I've got it selected just for one GTX 1060, so that's one of the cards that I have, and it gives me a good comparison to how things are going. I've got my electricity cost at 18.5 cents per kilowatt hours. If you guys are in the States or wherever you may be, you'll probably find that your electricity costs are quite a bit cheaper. And then you've got the option to turn on the algorithms, kind of one by one, and they're pretty good base characteristics. So you can adjust them. For example, if you're getting slightly better hash rate on your GTX 1060, you can adjust it, or if you're getting lower power, you can adjust it for each coins. But I use these, this is kind of like a rough and fairly accurate basis. So then I go to calculate, and it's going to show us typical earnings for a single GTX 1060. So it says that the most profitable coin, again, is to mine is Ethereum, and it's been like that for quite some time now. Pretty much for all of this last year, I would say it's pretty much been Ethereum for me. That's what I've focused most of my time mining. And you can see that the revenue is 78 cents, but the profit is 38 cents. So we're losing quite a chunk on our electricity costs. Previously, this was, I think, a lot of people was kind of getting well over $1 a day to $2 a day, and sometimes more, depending on exactly when you was mining and exactly what that Ethereum daily price was. If you look down, you've got some other algorithms as well. So you've got BitSend, 33 cents. But another popular coin that a lot of guys are going to be mining with their Nvidia hardware is Zcash. So you can see the profit is much lower, more than 10 cents lower, mining Equihash. And then again, also, I think there should be Monero in here somewhere. Yeah, see, so Monero right now is a loss-making coin. If you're mining Monero, you're not going to be making any money at the moment. There's also some other talk regarding Monero ASICs. I'm not going to get into that right now. But if you're mining Monero with your GPUs, you're not basically making any money. So what that means is that if these Ethereum ASICs are real and they are coming onto the market, for us GPU miners, it's going to be incredibly hard in the future. So what I would say is start looking for other options for your mining activities, other coins and other things that you might find interesting. I'll be doing a follow-up video on kind of a way forward on a separate video because it needs careful consideration, and I'll give you guys some ideas on what I'm going to be doing as we kind of run into this headwind. But that's pretty much it for this video. So I just kind of want to give you more of like a news update and a general overview of kind of the things that we're running into right now. But like I say, I'll share some other useful information, tips and tricks on what we can do together to kind of work through this tougher times that are heading our way. So that's it for this one. Thanks very much for watching, and I'll see you on the next video.